I'm saying beating on this dude. That's what.
Throwing the bangers. Throwing the bangers.
Yeah, Chris,
That
I'm gonna
30's got
go over
crazy though.
US 30 right now. I'm gonna show you guys how I scalp, so you guys can see. I think everybody's here. If anyone else comes in, hey Aaron, just check the participants, and if someone's like trying to get in, or do you see that on yours, or is it just me?
I think you should let me.
Okay, cool. Yeah, because I think we might have to. Do you see that one right there? There's like there's like people on there. I just want to make sure you can see it, just in case.
Yeah, I don't see nothing, bro. I just see the people that's in there right now, the 37.
It's all good. I just admitted everybody's so cool.
YOLO.
All right, cool. So I'm gonna show you guys how I scalp US 30. It's pretty much the same strategy that we use for K2, except I use a little bit of extra confirmation. So for this strategy, you can use it even though the market isn't trending, but you can see here it was trending all day today, so I was able to just take all these buys. But if market is how it is right here, or it's neutral, I'm gonna go back over here. And so pretty much, type of what I look for. K2.
Bro.
First, what I'm looking for is you need to identify swing high, swing low. Depending if you guys are taking a buy or sell position. So if you're taking a sell, you're gonna want to identify the swing high. Or if you're taking a buy position, you want to identify the swing low. And next, you need to identify, let's see, many people. All right, cool. All right, so next, you got to identify a bearish or bullish move following the swing. And then lastly, K2 signal confirmation. Aaron, can you check those the signals, see if there's anything we could take?
Yeah, mine's just ranking too. A bunch of them. Yeah, there's a valid the CAD CHF.
All right,
let me check and see. Yeah, you can check.
Wait, y'all got alerts on for all the pairs?
Yeah, pretty much. So if I get it,
How you do that?
I set them all individually. So I got one for pretty much everything, for like K2 pullback, K2.
That's hard.
And it's pretty cool because like me and Aaron, like we're never really on the charts. We only look at the charts when you get an alert. So if you like that,
well, CAD CHF is invalid.
That's hard.
Yeah, pretty much. So right here we got a valid signal. We already had an entry up here. So if we were in this, it would just be a continuation upwards. I forgot what I call it, Aaron. I think it was.
So, can I answer that right now?
It's on resistance, bro.
Is it?
Okay.
Yeah, I don't think you have enabled yet.
Oh, there we go. Yeah, that was the reason why we didn't take it earlier, because it was like literally a resistance. Let me see. I mean, it wasn't that close, but it was. Yeah, it was.
Yeah, my notification is loud, bro. I said it super loud, like it can wake me up.
Yeah, no, me too. Like I've been like.
He said he can't. He said he can't hear you guys.
He said, "Did you activate sound?"
Yeah. So how do you set up for all the pairs?
My bad. I was admitting people to the chat. Yeah. So if you want to send an alert for the pair, all you got to do is go to the specific pair that you want the alert for. So say if you want an alert for like GU, all you need to do is click on alert up here. And then after you click on that, right here where it says condition, you'll change that to the K2 TS indicator. And then change this to signal fired. And then you'll change this to once per bar close. Because if you have it only once, it's only going to give you one alert. And if you have it
Oh, I had mine on once per bar because that's what it said in the training. I thought.
Oh yeah. Well, if you're like looking at it, like if you want to get like a head start on the trade, then you could do once per bar, and then every time it gets a signal, then it'll give you an alert. But the reason why I put once per close is because I have so many alerts. I have like like over 50 alerts, so I don't want them to be going off like at the same time, even though they're not. Like when you put once per bar close, it'll give you an alert once it closes. So once it closes,
Right.
It fully closes, then it'll give me an alert. But if you have it,
That makes sense.
yeah, because if you have it once per bar close, then it'll give you an alert. But then if it disappears, it's like that's pretty much your alert. It's not going to re-alert.
And it does that a lot. It does that a lot.
Exactly, yeah. And then you're I mean, it's gonna be ringing like all day.
Yeah, I know. That's what it is. I'm about to change that right now. I'm not.
Yeah. Yeah, because a lot of people, like when I first started trading, I liked it when it was multiple bar because I wanted to see when every trade, was appearing. But, over time, it's like it rings way too many times and I get annoyed. So I'm like, because I get mad if I look at it, it's not a valid entry, And that's pretty much why I use, once per bar close because I have way too many alerts. But yeah, pretty much you can do that for every pair. If you want for GU, you want one for, like pretty much you have to go one by one.
I'm going to do that right now. Because I'll look around, and a half hour had 342 alerts.
Yeah, man, that's how mine is too. Like even if I like mine is for per bar close, but I still get a ton of alerts. Like this is like barely from today. Let's say the 6th. Yeah, so it starts from down here. I probably got like 10, 20, 30, 40, 50, 60, 70, 80, 90, 100. I probably got like 200 to 300 alerts here. And this is like per bar close. So like
Hey, Sean, Shoaib said he can't hear you.
Hear me? Let's see. Trying to figure out. Yeah, they did an update on so I'm not sure. All right, Lisa, can you hear me? I just want to make sure. Lisa, Soeb. There's a couple people still trying to get in. Let's see. Are these alerts provided? Yeah, you can only set up your alerts if you have access to the indicators. The alerts in the premium group are pretty much the trades that I'm taking. Those are the ones that I put out with specific stop loss, TP, and entry. But if you want to get every alert, then you'll need the indicator because the indicator is what's used to set up these alerts. Because if you don't have the indicator on the chart, you won't be able to see these right here. Cool. So wait, can you hear me now? I just want to make sure so if you hear me. I know Lisa could. Everyone else is cool. All right, cool. Let's go back to US 30. Damn, man, I'm gonna be mad if this is down. Being down heavy.
Nice.
I mean, it's cool. At least we know the strategy's working. Yeah, let's go back to let me admit these people. All right, cool. So I think we were right here. All right, so back to the K2 US 30 scalping strategy. So for this strategy, I use this on the 5-minute. So in order to apply the strategy, you're gonna have to know, like basic price action just to be able to identify, what the swing high is, swing low, and to pretty much identify whether there's a bearish or bullish movement following the swing. So first, you want to make sure that there is a swing high or swing low. So right here, if you follow these candles, if you look at them by each movement, let me mute some. Mute this person. I pulled this man. All right, cool. So first, you want to make sure you want to identify where the swing high or swing low is. So right here, if you swing from up here, you can identify that this is a swing high, swing low, swing high, swing low, swing high, swing low, swing high, and so on until you get down here. And as you get down here, you can see that this is the swing high, the swing low, swing high, swing low, swing high, and then this would be the swing low right here. So once you identify the swing low, you can use like a horizontal line just to have a good idea where the swing low is. And next, you just want to make sure that there's since we're entering a buy right here, you want to make sure that there's a bullish move following the swing. So as you can see here, it swung low, and then it had 3 strong bullish candles right here. Lastly, you just want to make sure that there is a K2 signal to confirm the momentum swing upwards, which we do right here. So all 3 requirements are met. So first, you want to identify the swing low. Next, you want to identify the bullish move following the swing. And lastly, you want to identify a K2 signal for confirmation. So once you have those right there, I zoom out. I choose the long tool, and then I'd set it up like that. And then the key thing here is if you're trading US 30, and if you're familiar with US 30, you'll know that price moves like crazy fast. So once price moves into profit, you're going to want to move your stop loss to break a little bit above break even so you can cover the spread. Or if you want to just move to break even, you can do that too. But I usually like moving it up, 5 or 10 pips just to cover the spread so I can make at least some profit. So if we let this run, you can see that price pulled back. Then price shot back up. In this situation right here, probably on this pullback right here, I would have, because price already moved into profit pretty heavy, I just want to make sure that it covers spread. If you're trading on Hugo's way, spread is usually around 227 pips. So once it hit this area, I'd been straight in profit. So as it moved up to 500 pips, I probably would have moved my stop loss to a little bit above break even. Probably like 100 pips. Just so I could at least make some profit. Yeah, so right there is about 100 pips. So as it came back down, it would have stopped me out. And then as it pulled back down, I would have re-entered. So it would have re-entered again right here. As it pulled up and it pulled back down, I would have got stopped out again in profit. And then I probably would have entered again on the next signal. Once I do it twice, I usually try to sit it out because price is moving around too crazy. And I want to risk like a reversal happening after. But here, I'll let it run fully through just to see if it hits full TP. If not, then we'll go back and we'll identify another entry. Yeah, see, this is why I wouldn't have re-entered. So like I was saying before, once you do it twice, then I'll just wait for the next entry. So it went up once. I made 100 pips profit as it pulled down. I entered again once it swung up, and then I moved my stop loss in profit. So I would have made 200 pips right there. And if you're trading, depending on which broker you are, some brokers for US 30 are they're $1 to pip. So if you made 200 pips on there, you would have made $200 just from those like quick scalps. And that's pretty much what I did right here. So if I go to I was sending Aaron my profits just right now before we got on this call. I entered US 30 for 2 entries. One I made 221, and then the second entry I made $80, and that was in a couple seconds. I don't know if it has. Aaron, do you know if it has the time here when I entered? No, right? Just when I closed.
Maybe like 6:30 probably.
Yeah. So we'll go over this trade to later once we get to that.
Is that off Hugo?
Yeah, pretty much. I trade indices off Hugo's, but only
that spread 227 right now.
Oh, was that the spread?
Yeah.
Yeah, the spread's usually 227 for US 30. I think that's just how it is always. Every time I look at it, it's usually at that number, except during the swap spread. During the swap spread, that thing will go crazy, like over 1,000. But yeah, pretty much. So the main key when using the scalping strategy is to eliminate your risk. You have to be paying attention. You can't just let it run, because the thing with US 30 is that it moves around like pretty crazy. Right here, you could have seen if you missed this and you didn't have loss in profit, you could have had a loss right here. Let's move on to the next entry. That's crazy. Okay. New people real quick. Right here, I'm gonna unmute you, and then yeah, if you guys want to be unmuted, just let me know so I can unmute you guys. But I'm just gonna mute everyone for now, just so there isn't. Here, I'm gonna unmute Curtis too. What's Curtis? Pip boy. All right, cool. Aaron, can you hear me?
Yes, sir.
So I unmuted you and Curtis. So you guys are cool. If you guys want to be unmuted, just let me know, and then I'll unmute you guys because there's just too much noise in the background. And this was a crazy candle here. What is this one? Let's see. Lisa has a question. Lisa, when scalping indices, you don't care about the momentum bar, correct? It'd be better if there was momentum, but if you look at the market for the past couple weeks, there's no overall trend. So this is why we focus more so on price action rather than the trend. But you'll see today that the market was trending heavily. So if it is trending down, you're going to want to trade in the direction of the trend, just so you know that you're trading in the proper direction. Let me see if there's another entry I can go over right here. All right, so we got one right here. It's pretty much the same thing. So you want to identify where the swing low is, since we're taking a buy position here. If you look at these candles right here, you can see that it swung up right here. So this is the swing high, swing low, swing high, swing low. So this is the low right here. You could put a horizontal line here to mark the swing low. And then after that, you want to identify if there's a bullish or bearish move following the swing, depending if you're taking a buy or a sell. And since we're taking a buy here, you want to make sure that there's a strong bullish move following the low. So the low's right here, and then you can see that there's a bunch of bullish candles right here. So this gives you a confirmation of a bullish price action. So once you have those two first requirements met, so we've identified the swing low. Next, we identified a bullish move following the swing. And next, you just want the K2 signal for confirmation. So right here, we have a buy signal. And once we do that, we're going to enter on the open of the following candles. We'll zoom out. We'll use the long position tool. And then we'll set our entry right there. So next, we'll let it run. And it would have hit profit target in like 5 minutes. So in this situation, you wouldn't need to move your stop loss because it went straight to your profit target. And then there you would have made 1,178 pips. So we got that. 178. Well, yeah, so there's one in right there. And then we're just going to keep going. So this is today. So today's actually this is from yesterday. On the 5th, yeah. So Sunday when market opened, this is when these moves occurred. This is probably why I didn't notice these moves, was because market just opened, and that's why I wasn't entering these trades at this time. But once it hit like afternoon, so yeah, I thought this was live. Oh no, there's a live trade right now though. This is the one that I just took. So you see the sell right here? This is a scalp sell right here. And I just made that right now. See my US 30 sell, made 78. I took this buy right here, and that's how I made that 221 right there. So there's a sell going on right now if you want to take it, but I can't guarantee it's going to keep going down. So if you want to take it, you could. But it's been
Don't do that.
How's the hourly looking, bro?
Just wait.
I would just wait for another, because it's going to pull back at some point. I mean, they came on the call a little late. We were talking about this earlier, but you came on like you missed the whole trade. Yeah,
exactly. I said, how does the hourly time frame look?
Oh, that's what's up.
Coming down. So
this might retrace hard, yeah.
It established the high right here, so I see it coming down. So I'm probably just going to be taking sells from here moving forward. So what I'm doing now with this, I'm waiting for another buy signal, like a retracement signal, and then I'm going to catch it as it comes back down again. But I already made my money off this, so I'm not going to re-enter. Like, I'm not going to get greedy because I already made my money. And I'm not trying to lose it all off, like, you know, this risky trade. Because the trend is still pretty high. It's pretty high uptrend. Looks like it's coming down now, but, you know, I wouldn't want to go against the trend after I already made my money. So I'm going to go back to the last trade we just talked about. So we already went over this. I'll go to this next one right here. It's pretty much the same thing for every single trade. The only difference is once it's trending downwards, then you're only going to want to take, I mean, you could have taken this trade right here too. So when the trend meter is neutral, you can take buys at buy positions and sell positions. So right here, you could have taken this. I think I might have taken this yesterday. It's the same strategy. So first you want to identify the swing high. So as you see here, price swung up to the high right here, and it swung down. This is the swing low, and it swung back up to the swing high right here. So I'll put a horizontal line here so you guys can see where the swing high is. And so for this entry right here, this would sort of be considered a valid entry. The only problem is when you're identifying price action, it's really subjective. Like, so for me, I would see this as a bearish move, but for some people, they won't see it as a bearish move because there's a bullish candle in between. But I can see that there was a bearish move from way up here and just continued down here. So in this situation, I personally would have entered this. I zoom out, put a short position right here. And then as price moved down in profit, I'd move my stop loss in profit too. So you can see right here, price moved in profit. So I would have moved my stop loss to break even. And then as it kept moving down, looks like I would have gone stopped out right there because it pulled back. So I would have gone stopped out, you know, with a couple pips, like under 100 pips. And then I would just, and if you wanted to re-enter, you could have, and then made a little more profit there. But personally, once I get stopped out in profit or get stopped out at break even, I just wait for the next one because, you know, since we're trading on the 5-minute chart with scalping, there's going to be a lot of entries. So right here is another entry for a buy. So first you want to identify the swing low since we're entering a buy. As you can see here, price swung down, swing low, swing high, swing low. This is the low right here. So I'll put a horizontal line here so you guys see where the swing is. Next, you want to identify a bullish move following the swing. So you can see right here, after price swung low, it had a strong bullish move upwards. It was a green bullish candle and then a full bullish candle after. So once you have those two requirements, you'll use the K2 signal as confirmation of the momentum swing upwards. And you guys have to move really fast because these are 5-minute candles. So like once the 5-minute ends, you got to hit enter like market, like right when this candle closes. So in order to determine where the TP and stop loss is, we zoom out, hit long position. And then now we let it run. And you guys got to remember that once price moves into profit, you always have to move your stop loss to break even or like slightly in profit. That's going to be the main thing when you're scalping. Because the thing is, price moves way too fast. And if you're not paying attention and you're not monitoring your trade, price can reverse hard, and then you can end up hitting your stop loss. So let's check this out. So it pulled back. We wouldn't move the stop loss yet because it's at break even. Right here, price moved up, so I'd move my stop loss to break even. Still pushing up. The thing too with this trade is you're gonna have to know how to apply the K2 exit strategy really quickly. Or another way to adjust your stop loss is what I do is once this candle closes, I move my stop loss to the low of the following candle. So as this candle closes right here, I move my stop loss to the bottom of this candle right there, and then let it run. See, I wouldn't move it here because this was a bearish candle. So if it pulls back too far, then you might get stopped out. Right there, I would have got stopped out in profit. And then I probably would have re-entered. So as price came back down to entry, you have to be a little more advanced to be able to spot these things to know when to re-enter. So personally, if you get stopped out in profit, I would just wait for the next entry. But for me, I'd probably re-enter as it pulled back because I saw down here that the trend is now green. So this indicates that price is probably going to be swinging up moving forward. So right here, as price pulled back where entry was, I put a buy stop right here to re-enter. And then I just follow the same trade moving up. And then in this situation, I read back in the trade. As price moved up in profit, I move my stop loss back to break even. And then once there's enough movement, I move my stop loss to the below of that candle. And there you go. You would have hit profit target right there for 1,827 pips. So right here, you would have made about 100 pips right here. So we made 100 right there. And then I would have re-entered right here and then made the full move. So the total would have been about 2,000 pips. And then you would have made that in about 3 hours. So in about 3 hours, you would have made 2,000 pips. I'll just add that to the pip count, and then we'll add that up later. These are all trades from today. So this is actually from yesterday and today. So this is Sunday. We're still on Sunday.
Did you take the other position right there when the when the next candle came up for the buy?
Yeah. So right here, like earlier when I said that if you get stopped out, then just wait for the next entry. I would have just waited. Mm-hmm. As you can see here, there's another entry right here.
Right.
So if you weren't re-entering, then you would have just waited, and then this wouldn't be a valid signal because it's a bearish candle on a buy signal. Also with this right here. So one thing is once price is trending heavy, like the trend meter is green on the intraday settings, then I wouldn't take any more sell positions because you don't want to go against the trend when it's pretty heavy. Similar to how the other K2 strategies applied. So I'd only go both ways if the trend is neutral, but if the trend's green, then you for sure don't want to take any sells. Even though these are valid entries right here, or this probably wouldn't because the swings up here, there's no bearish movement. Same with right here. There's like no real confirmation that it's a bearish movement down because this would be the swing high, this candle right here. And so if you're looking at that sell signal right there, there really isn't much of a bearish movement. I don't know if you guys can see that, but I mean, just me eyeballing it, there's no bearish movement following that high. So I would have avoided this trade. But like Curtis was saying, so with this signal right here, this would have been a valid signal. So first you want to identify the swing low. So as you can see here, price swung low, swung high, and then swung low again right here. So this would be the low on this red candle right here. And next, you want to identify a bullish movement following the swing. So as it swung down here, there was 3 green candles, which provided for a bullish movement. Next, you just want to confirm it with your K2 signal. So if K2 buy confirms a bullish movement upwards, So we have the three requirements here now. So we have the swing low, we have the bullish movement, and then we have the K2 signal right here. So once you have those three, set up the your T right here, and you'll do the same thing that we did on those previous moves. So now you let it run, and you got to make sure that once you move into profit, that you move your stop loss to break even or slightly in profit. So right here, price moved into profit about 450 pips in about 5 minutes. So at that point, I moved my stop loss to break even. Right here, it moved up again. So I'd keep sliding my stop loss up a little bit, slightly below that candle's low. So right here, I might have gone stopped out. I'm not sure if it would have gone stopped out. But yeah, actually, no, we'd be good because we're pretty close, but it hasn't triggered it. So you're still in the trade. And right there, you've gone stopped out. So if you're trailing the stop, you could have moved your stop even higher. I was just leaving it down here for demonstration purposes, but as price kept moving up, you could have moved your stop loss. You could have like kept sliding it up, like I was saying, putting it at the low of the previous candle. So if you kept sliding your stop loss up like that, you would have made 700 pips in about 20 minutes. And if you're trading, if your broker's trading $1 per pip, you would have made 700 bucks in about 20 minutes. And like I was saying before over here, you could re-enter. I only re-entered twice. So as it came down right here, I would have gone stopped out for 700 pips. As it swung back down, I'd put another buy stop right here. So as you see, price would have triggered my stop right here. I'd put another buy stop right here and then ride it up to try to hit full profit. And it would have stopped me out right here as well. So if you were doing like I was saying, sliding your stop loss upwards to the previous candle. So as it moved right here, you move your stop loss. As this candle closed, you move it to this low. As this candle closed, you move it up again, and then so on. And then if you caught this move right here, so on this move, you'd make 700 pips. And then on your re-entry right here, you make another 800 pips. And then as it pulled down again right here, I wouldn't re-enter. Like I said previously, I'd only do it for 2 tries. Once it hits 2 tries, price is likely to reverse. So then at that point, I would just wait for the next entry. But if you let yourself get stopped out right here, like I was talking to Curtis about, you can just wait for the next entry. So there's another entry right here. So right here, we would have made 700 pips. I'm not even gonna count the other one. Let me grab the, so these are all the gains just from yesterday and today. So like, you know, the past 24 hours. So that first move was 700 pips. And if you wanted to enter again right here, same thing. First, you want to identify the swing low. So the swing low would be right here. This candle, as you can see, this is the high right here. Swung down, swung up for another swing high, and then swung down here for the swing low. So I'll put the horizontal line right here so you guys can see where the swing is. Next, you want to identify a bullish move following it. So after this swing low right here, you identify this bullish move right here. There's three bullish candles. So that's a clear bullish move right there and straight up, no pullbacks at all. And lastly, you just want to confirm the K2 signal giving you a momentum swing upwards. So right here, you zoom out. You enter your long position right here. And then do the same exact thing that we did earlier. So as price moved into profit, you would have moved your stop loss in profit as well. So right here, actually. So the main key with scalping is you guys always have to minimize your risk. Like even if you think it's going to go upwards, you always have to minimize your risk. And even if you get stopped out on profit, you can re-enter later. Like there's no big deal. Since you're trading on the 5-minute, there's gonna be a lot of entries. Let's see, T said so both bearish and bullish moments. No, it's not 3 candles. You have to it's gonna depend on, you have to look at price action. So if you don't know how to read price action, you're gonna have to learn that. This is a clear price action move upwards. This isn't how it's gonna look all the time. Like right here, there's 3 bullish candles. Right here, there was 3 bullish candles. Right here, there was only 1 bullish candle. It's just gonna depend on the one that you're looking at. So right here, there was like 1, 2, 3, 4, 5, 6. There were 6 bullish candles. So what you're really looking for is, multiple bullish candles or multiple bearish candles without much pullback. But I mean, that's not how it's always going to look, though. So I'm going to try to find more examples as we move forward. But if you don't understand price action, then I don't recommend that you use this strategy, because this strategy is based on price action. All right, so let's go back to here. As price moves your profit, we would move our stop loss to break even or in profit. You got stopped out right there. If you wanted to re-enter, you could. So as price came down here, you could have put a buy stop right here to re-enter. And you could have re-entered right there. And once you re-enter, you're going to have to move your stop loss and profit. This is why I can't give you guys scalping signals, because by the time I give you guys a signal, I'm already out of the trade with profit. And not everyone's able to take the signals, right away. So I think probably tomorrow, I'm probably gonna hop on a live trading room, and I'm just gonna yell out scalp entry. So I'm gonna tell you guys what I'm buying, tell you guys what I'm selling, but I'm not gonna be able to type it out. But if you enter this right here, as price moves up, it's about 350 pips. You would have moved your stop loss to break even or like slightly in profit, and then you would have got stopped out right there again. So on these two, you would have made about 150, and then this one over here was about the same. So you probably would have made 300 pips on these two over here. And if you're trading $1 per pip, then that's $300 in about 10 minutes. But you got to be really fast, because the thing is, if you don't catch these, if you don't move your stop loss in profit, and as price pulls back, you're going to be in like huge negative right here. Because instead of having 300 pips, you would have had negative 500 pips. And this is why I don't recommend scalping to any like new traders or any beginners, because although like you can make a lot of money trading by scalping, you can also lose a lot of money if you don't know how to do it properly. So let's see if there's another entry over here. Right here we have another buy entry. Same setup. First you want to identify the swing low, which is right here. You can tell this is a swing low just by looking at the candles. So it swung low right here, swung high, swung low, swung high, and then swung low right here. So this is the low. Next, you want to make sure that there's a bullish move following the swing. So right after the swing, there's 1, 2, 3 bullish candles right here. So right there, there's 2 requirements met. First, we've identified the swing low. Next, we identify the bullish move upwards, which are these candles right here. Lastly, you just want to confirm a K2 signal, confirming the move. So right here, we have a valid entry. We'll zoom out. Long position right here. So right now I'm going over like this is a more complex way to apply the strategy. A lot of people aren't going to be able to apply it this way, but I know a lot of you guys wanted to learn. So I'm just explaining this to you guys now. After this, I'll go over the easy way. But the easy way is going to be a lot more risky. Mayan said, can you scalp using MT4 on your phone, or do you recommend using your laptop? I do all my scalping, well, not really scalping, but all of my indices trading on my phone. I use a Mac, so I don't have MT4 on my computer. So I do everything on my phone. I do the charting on TradingView, but I do all the actual trades on my phone. All right, so right here we have a valid entry. Like I said earlier, first you identify the swing low. You make sure there's a bullish movement following it, and then the K2 signal. So right here we have the setup. You guys got to make sure to move your stop loss and profit as price moves into profit. So right here we have a bullish move up. I would have moved my stop loss slightly in profit at the low of that candle. And then you would, if you did the trailing stop that I was talking about earlier, you would have moved your stop loss up here after this candle, and then after that you move it up to right here at the low of this candle. And then you would have gone stopped out up here. So if you took this move right here and followed it with a trailing stop, you would have made about 432 pips. And then, like I said earlier, if you guys are trading dollar per pip, you would have made about $450 in 50 minutes. So 50 minutes, you make $450.
Oh, standard lot.
Well, if you're trading Hugos, that's the lowest you can trade. 0.01 is equal to a standard lot. So that's why you need 1,000 to trade indices. You can't trade anything less than a standard lot, pretty much. So you guys are gonna be trading a lot. So everything's pretty much worth $10 per pip. And if you're trading, well, it depends on your broker. Like if you're using AvaTrade that Wade uses, I think his is a little cheaper. It's not going to be a 0.001 or a 0.01 equivalent to standard lot. I think it's going to be measured the same as a standard lot and a micro and a mini. But on Hugos, US 30 is equal to a standard lot. So that's the lowest you can trade.
Yeah, Uncle Hugo don't play.
So you got to be really careful. And that's why I tell you guys that you guys have to move your stop loss and profit. Because the problem is if you don't move your stop loss and profit and then you let it run into negative, you would have gave up like 500 pips right here. And they would have ran into the negative, 500 pips. So that's why I don't recommend scalping to people that don't know what they're doing. Like honestly, I don't recommend it for any new traders because you have to be really quick. You have to be able to analyze the charts like as they develop. And if you guys can't do that, you guys can lose a lot of money. So, I mean, a lot of people see me making a ton of profit trading, like if I show you guys my profits from today, scalping, like this is just like a couple minutes ago, made like over $300 in a couple minutes. Same with my other profits from today. Like, so you had straight wins. But the thing is, I have these small losses because I'm able to eliminate my risk when possible. So when I move my stop loss to break even or a little bit below it, I just take my losses, right? And I move on with the next one. As you can see here, I was winning a couple $100, lost 58. I made it right back, like times 3, 170, 116, lost $5 because I moved it to break even. I made it right back. So like, I know a lot of people don't like to, cut their trades short. Hold up, guys. I'm gonna check this trade out. I have a live trade right now.
I know that current one looking nice.
Shit, what's this one? All right, you guys can buy US 30 right now. All right, I'm in it.
Artists don't think about it.
Yo, I didn't do anything, man.
I'm just letting you know.
If anything, I look at that NAS.
Yeah, this could shoot up and retest that high.
Yeah, so this is a valid entry right here. I mean, I didn't take my time to explain it because, time's of the essence. So now you guys can watch this live trade with me. I'm going to watch this before I keep explaining because there's real money involved. I took a 0.05 lot size. So I have to close in 5 standard lots. So yeah, I'm going to buy position right now. I don't know is Tay still in here? Looks like he missed out on this trade. That's cool. When I'm scalping, you're supposed to enter on the open of the falling candle. So once this candle closes, I enter market. Unless you want to enter a limit, you could enter a limit too. It just depends on, you know, the time you're entering the trade. But for the most part, you're probably better off entering markets. You don't miss the move. And now, waiting game. I already have my stop loss preset to 22590, which is basically right here. So once price moves up, I'm going to automatically just move the stop loss. So now we're just waiting. Yeah, so I'll go over the requirements while we're waiting here. So first, we wanted to identify the swing low, which was right here. Next, we confirm the bullish movement following the swing low, which are these three bullish candles right here. And lastly, we just want the full confirmation with the K2 buy signal, basically indicating a swing upwards. So right here, we have all the requirements met, and that's why I entered on the open of the falling candle, which is right here. But I entered a little late at market, and that's why my entry was up here. That's also covering the spread, because Hugo spread is about 227. So I think I probably would have entered. This is where my real entry was, down here. But he gave me a shitty entry because I had to cover the spread. So I'm taking this time, just waiting for it to swing up, and then once it swings up, I'm gonna move my stop loss and profit. Aaron, did you get some signals?
Nope.
No, that's mine.
That was Curtis.
I was about to say, what time frame y'all looking at?
No, that's just gold and Ethereum.
Curtis looking at that 5-minute time frame.
This is the thing with scalping. You guys have like it's gonna test your patience like crazy because you really don't know where price is going, and that's why I always recommend moving your stop loss and profit whenever you can. So I'm just waiting for it to swing up.
So, do you talk to the chart?
What was that? I talked to the chart.
Yep.
Yeah.
Like, come on, you know you want to get up there. Come on.
Yeah, no, I have before though. You know, like personally, I like to just set it and forget it. But the thing with US 30, you know how US 30 moves. It moves way too fast.
Oh yeah.
You can't leave it unmonitored.
Yeah, you leave and come back, your whole account going.
Exactly.
That's 30-30.
Yeah, real that dirty 30.
Yeah, but US 30 has become my favorite pair to trade. Not even pair, it's just the asset. Because away with this trading strategy that I'm explaining to you guys, if you guys do it properly. It's just a matter of time. It's like all patience, really. I try not to look at it very often, but like usually what I do is I'll set like an alert on it just to remind me. So I just put something like US 30 profit. And then I pretty much just wait for it. Because once it moves in profit, then it's cool. Then I move my stop loss in profit, and then I don't have to, I have nothing to worry about at that point. Just a matter of time. I keep forgetting we're in London. I mean, not London. We're in Tokyo, so it's gonna move a little slow. Here in New York, I'm moving super fast. So like I'm in and out of trades within seconds, and I just keep running it back every time it pulls around.
I like AUS 200 too. It moves pretty much almost the same. It's a little smoother though.
Oh yeah, no. AU 200 is it moves exactly the same direction, but it's cheaper and it moves a little smoother since it's just the the top 200 Australian stocks. So it's not as crazy as the US 30 and the DAX 30.
I've seen one that's worse than both.
Which one?
It's called the EUSTX 50 or something like that. The EUS, yeah, the Euro stocks. Oh man.
Oh yeah, the DAX, the GER 30.
No, it's something different than that. It moves real erratic and unpredictable.
Yeah, I'm like wondering which was that one. Yeah, because I know the DAX 30 it moves, but it moves like by 10 pips. So yeah, like you'll be looking at it, and your profits will go from like positive 100 to like negative 200 to like positive 300. And you're like, fuck, dude.
This right here, the EUSTX 50, German is like crack. That is like Coke times 10. Like it will literally like it's so weird. Like it'll move by hundreds of pips in a second.
Yeah, and I've seen that one before. That one was crazy.
I wouldn't touch that with a 10-foot pole.
Yeah, I tried it. The first time I traded that one, I didn't realize that it moved like 10, 20 pips per second until like I started looking at my profits, and I was like, dang, this thing's moving like crazy. Like you go to deep profits, like deep negative. And then I asked Wade, and Wade, he's like, oh yeah, like don't trade that. I was like, fuck, you should told me that beforehand.
Wade say don't trade it. Yeah.
Yeah, if he says not to trade it, I'm like, all right. He knows way more than I do about indices. Yeah, this thing's gonna move around way too much. Small time, and this thing's like, because I usually don't trade this during Tokyo, and I'm used to it moving a lot faster. It's like really testing my patience right now. 225. I know. Aaron, did you see any trades coming up?
Nope. I'll check it again. Excuse me.
I think there was a couple signals that I saw, but I didn't look at all of them. Yeah. I fucking hate Tokyo session. It's not that bad. It looks like it's moving a lot because we're on the 5-minute chart, but it's only moved like 300 pips. Feels like it's been moving for a long time. AT, I just saw your message. So there's no specific number of candles that'll establish, if it's a bearish or bullish move. You kind of just have to look at the chart. So like the problem with price action and the K2 strategies, that the K2 strategies, there's clear requirements that you should look for. But when you're looking at price action, you kind of have to read the chart, read the candles to see where it's moving. So if you were to see this right here, it kind of looks like a bullish movement, but not exactly because there's some bearish candles here. But for example, if you were looking at this move right here, there was a swing low right here, and there's a strong bullish move with not much pullback. This would be like a clear bullish move. Same with right here. As price swung down, swung up. There was 3 bearish candles or 4 bearish candles, including the signal candle, and this would be like a clear, bearish move downwards. But there's no specific number of candles, depending on what you're looking for. Like it all really comes with practice. Like once you look at charts, you can see what a bearish movement looks like. Like this is a bullish movement, obviously. This is a bullish movement. This is like a bearish movement. So there's not really a specific way to identify if it's a bullish or bearish move, because like what I see as a bearish move might not seem like a bearish move to you. So it just depends on how you interpret the charts. But yeah, if there's like multiple candles, like multiple bullish candles, then yeah, you could identify that as a bullish move. Same with the bearish candles. If there's a handful of bearish candles, but there's no specific number. So like there's only 2 bearish candles right here, but I wouldn't consider this a bearish move. Although if you're looking like right here, there's only 2 candles, but you would consider this a bearish move. Like I'm not sure if you understand what I'm saying by this, but I mean, price action is very subjective. All right, cool. Move back to profit. I'm gonna move my. Let me see. Let's see. Fuck.
Got you with the okie dog.
Is that you, Aaron?
No.
To learn to. Learn to ID.
Sorry. That gotta be Felix.
Felix in here?
I'm just playing. Yeah. Australian session is slow, bro.
Yeah, it's crazy slow. I'm waiting for this to swing up so I can. Should have moved it when I had a chance.
Yeah, but that's a nice bullish candle on the 5 minutes, so hopefully it shoots back up.
Yeah, it looks like a pretty strong bullish movement up. I'm back in profit.
Mm-hmm. There we go. Just need a little more push. There we go.
All right, I moved my stop loss in profit. So I moved my stop loss to it's gonna stop me. Whatever.
You got stopped out already?
No, not yet. I'm $50 in profit, but it's cool. Just gonna let it run. About 100 in profit now.
Nice, bro. Nice call.
Oh, T. that was T that was writing. Yeah, no, it's all good, T. But yeah, you understand what I mean by identifying a bullish or bearish move. It's really subjective because the thing is, like, you know, some people might see this right here as a bearish move. Like, since there was a high set right here with a bearish candle and it kind of moved down, some people would see this as a bearish move. But personally, I don't think I'd really see this as a bearish move because, you know, there's bullish candles here. So it's not a strong bearish move. Like, it moved bearishly down, but as it moved down, it retraced upwards, and then it pulled down, retraced upwards kind of heavily, and then it moved down, and then it reversed. So just depending on how you look at the, okay, cool, T gets the concept. Yeah, it doesn't have to be, you know, a strict, oh crap, I moved my stop loss again. So I'm gonna move my stop loss to, I don't want to move it too close, but I also don't want to move it too far off. I'll move it to 22600. Take off that alert. No one profitably. All right, well, I'm in profit 150 now. All right, it's looking good. All right, guys, I'm gonna keep monitoring this because I want to keep moving my stop loss up. Probably after this candle, I can let it run. You got about 50 seconds on this candle. I'm in profit close to 200. It's only been a couple seconds or maybe a minute. Yeah, it's been like a couple minutes, maybe 1 or 2 minutes. I'm up $200 with this little move. And this just demonstrates, you know, how much money you can make trading US 30 if you do it properly. So I'll move my stop loss up again to 610. All right, I'm up well over 200 now. I'm gonna keep pushing up. My stop loss again.
Nice. Shooting up. Coming on.
So that 1 minute. It's great. It's crazy how. All right, I got stopped out.
How much you make now? What's up, bro?
So I could put it up on the screen. All right, guys.
Yeah, I'm checking the charts right now.
So I slid my my stop loss profit. You guys watched me as I take this live trade. I made 171 in a few minutes, or maybe not even a few minutes, few seconds. Yeah, so easy as that, guys. I'm up 470 since 5 o'clock. It's only been 3 hours, so in 3 hours I made close to $500. It's like more than what people make a day at work. And yeah, it's Aaron right there.
Easy money, bro. How was that fast? Like, how much? Like 10 minutes? Almost $200. 10 minutes? Not bad.
Yeah, man. 3 hours, close to 500. Like, come on. How can you say no to that?
Real.
I'll stare at the chart for a couple minutes to make 500. But yeah, so there's an example of that trade. I'll come back if I find another one. Let's see, is Curtis still on here?
You muted him.
I'm on here. He muted himself. Man, I was getting scared when it came down.
Mm-hmm.
Fuck, man. Because like
I feel like you should have.
What are you saying there?
I feel like you should have put your stop loss at entry. I see it shooting up higher.
Yeah, I know. But I was tripping, so fuck it.
Yeah, I was trying to tell you I made about a good $4 off that.
Oh, what was that, Curtis?
I made like a good $4 off that.
Yeah,
and
man.
I got right out.
Yeah, when it was pulling up right here, I was starting to get a little scared because it was a pretty strong bearish candle. Yeah.
I should have just moved my stop loss and stayed in and not been out home.
Yeah, that's what I was gonna do. I was gonna move my stop loss to, break even and then let it run. But I was like, man, like the problem with this is that it's established a high here. So the thing is, like, it's a little uncertain whether it's gonna go up or it's gonna go down, because it might be setting a high right here and then swinging back downwards. It looks like that's what's gonna happen here. So the thing with this is, once I get a sell signal, like how I did right here, I'll identify the high, which is probably gonna be this candle, and then it's probably gonna be the same setup like right here. There'll be like a bearish candle and then a bearish signal candle, and then I can enter it to write it down like I did right here, and then write that down for a cool 1,000 pips. And if you're trading, if you're trading a dollar to a pip, then yeah, you'd make in 40 minutes you'd make 1,135. Pretty easy. I mean, easy if you guys are applying it properly. But yeah, let's go back to the examples I was showing you guys. So, hey Curtis, you understand the strategy?
Yeah, I understand it a lot better now, what you was talking about with the candles.
Yeah, it's a little complicated for people that don't know how to read candles, because like I was telling T earlier, like it's hard for like someone that's not experienced to be able to identify, what a bullish or bearish move is. I mean, for us, it's a little easier,
Right.
because we're familiar with like how candles are supposed to look. But yeah, like to someone, like this could be a bullish move, but like to me it wouldn't be, because there's mixed candles there. Same right here, like this would look like a bearish move to some people. Personally, to me, I wouldn't think so because of the bullish candles in between. But something like this, like I consider this like a definite bullish movement, because there's so many strong bullish candles following the low. But yeah, since you guys have already seen the the more complex strategy of scalping, I'll go over the more basic one. So if you guys know how the if you guys know how the original K2 strategy works, it's actually really simple. So if you were to I'm sure Curtis knows the original strategy. I don't know about it. I don't think Aaron does.
So what?
No, I was saying I don't think you understand the original strategy.
They don't start.
Yeah, so for the let's see, Lisa said Forex doesn't do indices. Yeah, Forex doesn't do indices. That's why I use Hugo's way for indices, but I use it only for indices. Yeah, unfortunately Forex doesn't use it. Yeah, there's a lot of other brokers. Aaron, do you know which other brokers are available that accept U.S. clients? I think Hugo's Way is probably your best bet. It's not.
And there's Traders Way is pretty cool too, but
yeah, the thing with option brokers is they're pretty much all the same. So I think you could go with whichever one you'd like. I just go with Hugo's because that's what everyone else uses. But I don't think you're going to find a really big difference depending on other offshore brokers that you might use, like Traders Way or what's the other one? Oh yeah, Caught Forex.
I think Hugo's gives the best
Spread.
The best, not spread and the best leverage.
Yeah, that's what I was thinking too, and that's why I use them. But the thing with me is, just do withdrawals off. Yeah, exactly. The problem with Hugo's way is that they really don't care about your account. Like they'll let your account go to zero, and blow your account with like one trade. So what I usually do is like once I go over 1,000 in profit, then I make a withdrawal, and I just reset it back to either 500 or 1,000. Generally 1,000 because that's how much you usually need to trade indices. But I don't go anything over that because I don't want to lose all my gains. And that's for the most part. That's what I recommend for most people too, like just in case, because like what happened. I don't know if you guys were aware, like what happened like last week or like 2 weeks ago. Like for some reason, Hugo's way like freezes around midnight, California time. And if you're in a trade during that time, you're kind of screwed because you can't get out of the trade. And that's what happened to me I think it was like last week. I was in a trade and the data was off. The data was like delayed by like a lot. It was off by like 5 to 10 to maybe 15 minutes. And I exited because I thought I was in profit. But when I exited, Hugo's basically blew my account. It was only $500, thankfully. But if you had more money in there, they would have let it go to zero. And that's why if I could use any other broker, I would. But dealing with any offshore broker, they're pretty much all the same. All right, see you later, Andrew. But yeah, Lisa, if you want to trade indices, you can go with Hugo's way. I just recommend that you definitely make withdrawals pretty often, and you keep your capital safe because they really don't care. But yeah, let me go back to the US 30 scalping strategy. This is going to be the easy. So first, you want to make sure there's a K2 signal present. Next, you want to make sure that the K2 trend meter matches. Intraday settings. If you guys don't know what the intraday settings are, they're 30-minute, 1 hour, 2 hour, and 3 hour. And the reason why you guys want to have 4 hour. And the reason you guys want to have the intraday settings is so you guys understand which direction price is moving overall for the day. So if the overall trend is trending upwards, then obviously you only want to take buy entries. If it's trending downwards, then obviously you only want to take sell entries. And lastly, we have another requirement with the K2SR, but if you're going to be scalping, it's not really necessary. So we'll just leave it at those two. So pretty much using the original strategy, first you want to make sure there's a K2 signal present. Right here we have a buy signal. Next, you just want to make sure that the K2 trend meter matches the signal, so they're both green and green. Next, what you're going to do is you're just going to zoom out. You're going to use the long tool, and then you're going to place it at the open of the falling candle, which is right there. And then after that, you're going to let it run and apply the K2 exit strategy. So if you guys understand what the K2 exit strategy is, basically what it is once price reaches 25%, so I'm just going to mark these here, 25%, 50%, and 75%. So we got 75% there. You guys aren't required to use the strategy, the exit strategy, but I do recommend it, especially if you're trading indexes, because indexes move pretty erratically. So right here, once we enter the position, once price reached 25% like it did right there, we would have eliminated our risk. So now everything moving forward is guaranteed profit. Once price reached 50%, you move your stop loss to 25%. So now you guaranteed 520 pips. So if you're trading $1 per pip, you guaranteed $500 in profit already. So right here, you leave your stop loss right there. And the only time you'd move your stop loss up is once the price reaches 75%. Right there, it pulled back. It probably would have stopped you out. So you would have stopped out with 500 pips. Not bad. And then it pulled back right there. And then if you guys got pulled out like that, you guys could have re-entered. You guys could have put your buy stop at the 25% mark. So as price was to swing back upward, you could have re-entered. But personally, I don't recommend it, especially with indices because they move a little too fast. If you let it run and didn't move your stop loss, odds are it probably would have hit prop target. See if it does. It just would have ran for a long time. So there you go. So if you let your trade run, like I don't want you guys to think that this is going to happen every time, but if the trend's super heavy, you know, it'll eventually hit. So if you let it run from start to target, it's about 8 hours. But in 8 hours, you would have made 1,971 pips. So depending on your broker, if you're trading with AvaTrade like Wade does, I think his is $1 to a pip. So you would have made $1,971 in 8 hours. It's not that bad. And you could have entered multiple trades too. So this is one trade right here. So that's one buy entry right there. You could have had multiple trades running. So right here we have another valid buy entry. If you guys were to enter that, first you want to make sure there's a K2 signal present. Right here is a buy signal. Next, you want to make sure that the K2 trend meter matches on intraday settings. Since those both meet, you'll zoom out. Put a long entry right here. And then pretty much you guys saw from the previous example that it hits profit target. So if you let it run, it eventually hit a profit target. Right up there. It's right there, it's profit target. So that'd be another winner. Looking at the chart again, there's another one right here. It's 3 wins right there. Right here, there's another buy entry. Same thing. Another winner. Another buy entry right here. And these are all within a short period of time. So if you're just sitting at your computer for a couple hours, actually that was last night. So this is from, if you're trading London session, you would have entered this right here. So within 8 hours, you could have made close to 2,000 pips, 2,100 pips, 1,600 pips, 1,600 pips, and another 1,600 pips. So if you added that up, I mean, you could have made a ton of fucking money. So let's see. So we had 1971. So plus 1971. 199. And if you guys haven't traded indices before, I don't recommend you guys start with indices. I mean, they're super volatile. As you can see, you can make a lot of money, but if you do it incorrectly, you can lose a lot of money as well. So instead of these being profits, these could have been losses for you. So unless you know what you're doing, I don't recommend that you trade this asset. So I think we have 3 of those back to back. Let me trade this back. 1, 2, 3, 4, 5. Delete this. The total on that would be calculator. So we got 1971 plus 2199 plus 1657. 7. It's a total of 9141. So it's a total of 9,141 pips, scalping. And if you did that for $1 pip analysis, you would have made 9,141 in 8 hours. So you basically make a lot of money in a little time. But that was if you're going to let your position run to full profit. But the thing is, like how I explained previously, I always move my stop loss and profit. So if you guys were to look at my gains from today, these gains could have been 9,000. If I let them run to full profit, but I stopped them out a little early, so I still made a pretty good amount. I made, this was from 754 just scalping, and then just right now on this call, I made another 470. So I technically made about 1,000 or a little over 1,000, 1,500 in profit just helping US 30, and I do this every day.
It's better to make a little than to lose a whole lot, though.
Exactly, yeah. And that's why I always recommend that you move your stop loss and profit, because, profit is profit, and those little profits add up. Like these profits don't look like a lot if you're looking, at the 27, 15 bucks, $6, but if you add it all up, I've made $754 in profit, just scalping US 30. So, I mean, it's totally possible if you guys actually put in the work and learn how to trade this direction. Tyler. Let's see, Tyler said, is this a different strat? So this is the original strat. The strategy that I was explaining earlier, that's more of an advanced strategy where you have to apply price action. But this one's a lot easier. You just have to follow 2 requirements. But the problem with this strategy is it only works when price is trending pretty heavily. As you can see down here, the trend meter, this shows you the overall trend on 4 different time frames. So we have it set to the 30-minute, 1 hour, 2 hour, and 4 hour. So on all these time frames, price is trending upwards, and that's why we're only taking buy positions. But as you can see, the past couple weeks, price hasn't been trending. You can see when it's blue, this means that the trend is neutral. And in this situation, you'd have to use price action to determine the direction. But if you're trading when price is trending heavily like it is right here, then you can just take buy positions. So this is a little easier if the market is trending, but the market isn't always going to be trending, especially during this time with the coronavirus going on. Let's see, so CT George. So the only thing left out is the bullish pre-move. Yeah, pretty much. The only reason we don't need to confirm the bullish movement or bearish movement is because we already know that the market is trending pretty heavy upwards with the trend meter. But if we were looking right here, we'd have no trend. But I kind of like trading when there's no trend, because you can trade both ways. So right here, we have a bullish movement. We could have rode this up right here for a scalp of 500 pips. Same with right here. There's a high right here, or no, so this is a high, so I'm down. This is the high right here. And it was followed by some bearish candle. So you could have entered a scalp right here as well. I would have pulled back. I put my stop loss right here to the swing. But I could have scalped this for another, 500 whatever pips. And then the thing is, when it's neutral, it's usually ranging, so you can write it both ways. So you could throw this right here, this down here. This would be the swing, the bullish movement right here. You'd enter on this candle. Your stop would be down here to the swing, and then you could have wrote it up for a couple thousand pips. Same with right here. Swung down. Wrote that down. Yeah, exactly. The advanced way of applying it is more for sideways ranging markets, and the easier way is when there's a heavy trend, which it's pretty obvious. Like if it's trending upwards, you're not going to enter any sells, obviously. And that's pretty much the real difference about it. Let's see. Cavi said, can we use the scalp strategy for Forex pairs? Personally, depending on which pair, because not all Forex pairs have high volatility, so you're not going to be able to scalp things like this. Like, it's going to range a lot more than not. But if you're trading something like US 30, maybe GJ, EA, GA, there's a couple pairs that move in the same direction as like indices and gold. We do have a scalping strategy for the Forex. It's on the course. But if we're going to use that scalping strategy, it's a little different. I'll show you how it works here. So this is the easy way of using it. And then I'll show you guys the intermediate way. This is basically the K2 pullback. So there's 3 ways to scalp. You can scalp the easy way if the market's trending heavy. You can also use the pullback strategy way. So for this, you want to make sure that there's a K2 signal present. The only difference is that the K2 trend meter does not match. So it's the same exact strategy. The only difference with this is that your entry is going to be different. So this is going to be the intermediate strategy. So I'll go back, I'll delete these. So here's an example right here. So right here, requirement 1. You want to make sure that there's a K2 signal present. Right here, we have a sell signal. Next, you want to make sure that the K2 trend meter does not match. So down here, the trend is, the overall trend is green, indicating that price is trending upwards. And right here, we have a sell signal. So these two don't match. And to set up your entry, you're going to do the same thing. Zoom out. Use the long tool to set up your entry. And what you're going to do here is you're going to set your entry at the high of the opposite candle. I mean, the opposite signal. So when you get a signal that's going the opposite direction of the trend, this candle is basically just indicating that this is going to be a pullback or a retracement. So what we're waiting for is we're waiting for price to swing back upwards to the overall trend and trigger our order. So right now we have a buy stop order right here, and now we're just going to wait for it to trigger. So right there, right here, it wouldn't have triggered because it pulled back downwards, and then on the next candle, it triggered. So now we're inside the trade. And then you'll pretty much let it run. You could use the exit strategy like I explained earlier, or you could just let it run a full profit. I do recommend that you at least move your stop loss to break even, just to eliminate all your risk and guarantee profits moving forward. If you did that, you might have gone stopped out right there. If you used the exit strategy, you would have gone stopped out up here. Or if you didn't move it, you just let it run, it would have hit TP right over there. So same strategy, it's just different entry, pretty much. So I don't know if you guys understand that. It's pretty much the same thing. If you guys have access to the K2 strategy, I have these videos uploaded to the course, and it explains it more in detail. If you guys want to practice and go over and look at it. But yeah, it's pretty much the same strategy. So right there, that'd be an entry. We have the K2 signal. It doesn't match the trend meter. Same with right here. We have another sell signal. K2 trend meter is green. So you'll enter a buy right there. As you can see right here, it hits profit target down here. Same exact thing. It's just different entry points. Same with this point right here. Right here, it's a red candle. I mean, a red signal. Trend meter is green. You could enter that right there. It would have hit TP eventually right there. Same right here, same thing. TP again. I mean, it's easy, guys. All you have to do is match colors. Same thing. Profit target. Profit target. And you can literally just, I mean, do this all day. Or you could even use both strategies. So, I mean, shit, if you're doing both of them, you could have had an entry right here, entry right here, entry right here. Like, literally all these could be entries. It just depends on, you know, how many trades you're trying to take, how much risk you can handle, depending on how much margin you have. It just really depends on you. Right here we have another entry. So right here we could have entered using the original strategy. Instead of them not matching, we have a K2 signal, and then we make sure that it matches the trend meter. They're both green, so we'd enter a buy position right there. And then you just let it run, profit target. You know, you could add a pullback entry right here. You'd have your buy stop right here, a trigger, profit target 2,000 pips. And then if you wanted to use the original strategy, these two match right here. It's green and green, so you can enter a buy right here. I mean, you know, there's endless ways to make money. You can match colors, or you can not match colors. I mean, you can make money both ways. It's a win right there. another entry here. So if you trade US30 today with the K2 strategy, I mean, honestly, you could have made a lot of money because each of these are about 2,000 pips each. So it's like 2, 4, 6, 8, 10, 12, 14, 16, 20. You know, you could have made 20, 30,000 one day just scalping. Curtis said, which strategy does Wade use? Wade uses, I think he uses the pullback strategy more often. I know he uses K2. He kind of uses it with his own little twist to it. He uses other indicators like order block. So he would wait for price to break through this little order block, and then once he gets a buy signal, like right here, he'd enter buy right here, enter buys. He does things a little differently, but they all go intertwine with the K2 strategy. Let's see, Mayan said, or Mayan, is it easier to trade US30 when there isn't coronavirus, or is volatility right now better for the strategy? I mean, it's kind of a double-edged sword, honestly. If you know what you're doing, then it's a good thing. If you don't know what you're doing, then you might panic a little bit because price is going to be, you know, bouncing around. So it really depends on your trading personality and how experienced you are. The thing is, I've been trading for a long time, so I understand when price is going to pull back, and then I just trust in the strategy because, as you can see here, there's a lot of times where price pulled back into the negative a lot, and you know, some people would panic and get out of these trades. But the thing is, I do trust my strategy. I've been using it for years now, and I know that, you know, eventually it's going to swing up and go into profit, and that's why I would have let these run, or at least move into profit. I would never close these in negative. So for me personally, the strategy works perfectly fine with or without coronavirus. The volatility is always good, but the problem with volatility is if it's not moving in the proper direction, like how it is here, you can see prices a little choppy. Yeah, you can see here price is a little choppy and there's no overall trend. So for a new trader, they're not going to be able to identify these trends, or, you know, identify that price is moving sideways like some people. So this might be really difficult for a new trader compared to how it was today. As you can see here, it was trending upwards pretty clearly. So for a new trader, this would be easier for them. But it would really depend on the person. Like if you understand how to analyze charts properly, then you could easily trade, you know, under all market conditions. But for most people, they're not able to analyze charts in that way. But yeah, pretty much this was these were the 3 ways that I apply the K2 strategy. I don't know if there's any more here, any more entries. I think there was a couple. Yeah, so right here, another entry right here. You could have entered a pullback right here, and it would have triggered over here. Would have hit profit target again for another 1,300 pips. If you enter the valid entry right here, where they're both green, long position, you'd have made another 1,200 pips there. I mean, the sky's the limit, honestly. It depends on how much you want to, how much are you looking to risk when you trade. If you're willing to sit at the computer all day to make, you know, 20, 30,000 in one day, I mean, so be it. But I mean, personally for me, I don't like to risk too much. So I usually don't have 2 trades running at one time. I know some people do, like Wade has like, you know, 3, 4 trades running at one time. But for me personally, I'm still new to indices, so I don't really risk that much. But if you do see Wade's profits, I mean, Wade's profits are like crazy compared to mine. Let me see if I can find the indices alert. So Wade posts his profits too. Like he makes my profits look like shit. Like I'm making 500, you know, 700. But Wade's making like 10 times what I'm making. He's also risking a lot too. Yeah, see, so Wade's making like a couple thousand trading indices. He's been doing this a lot longer than me, trading indices. I've been trading stocks, options, and Forex for a long time, but indices is like Wade's bread and butter. So if you guys have any questions about indices, feel free to ask Wade. He does risk a lot more. But personally for me, I'm only risking you know, I'm making like a thousand, couple of thousand a day, while he's making like, you know, multiples. And so what kind of setup would make you send out a signal for US 30? So a setup for US 30, I generally don't send them on the 5 minute. Sometimes I would send these, but the problem is price moves way too fast, so I can't really send out a signal on the 5 minute to you guys. Generally, if I was to send out a signal, I'd be on the 30 minute. Wade uses the 30 minute too. He doesn't really trade, give out scalping calls. But as you can see right here, same exact strategy. First, you want to make sure there's a K2 signal present. Next, you want to make sure that, you know, the trend meter is matching it. Another thing that we like to use too is the K2SR. So the K2SR indicator basically indicates when price is getting near support resistance. So basically what the K2SR indicator does is it automatically plots support resistance for you. So as you can see here, here's where the resistance is and here's where the support is. And as price moves, the support resistance will adjust. Like as you can see here, it's adjusting around there. So if we go back to that entry I was just talking about, right here, first, you'll want to make sure that there's a K2 signal, there's a buy signal here, then it matches the K2 trend meter down here, that's green. And lastly, you just want to make sure that price isn't too close to the resistance, because if it's too close, odds are price is probably going to reject off it. So if we measure this, it's about 500 pips away, so it's fine. This is just once price moves into profit, we would move our stop loss to break even to eliminate all risk. So to set up this trade, we're going to zoom out. We're going to put our entry right here on the open of the following candle, and then we'll let it run. So this is an example of a signal that I would give. So since it's on a 30-minute thing, is price is going to move around. So this would be the entry. It'd be this would be the entry price, the profit price, and the stop price. So basically, we're going to be risking 3,769 pips to make 3,769 pips. But the difference with my strategy is once you reach, like I said earlier, once you reach 25%, you're going to eliminate your risk. So now, zero risk. Everything's profit moving forward. And right there, you would have hit profit target. So within, within 4 hours, you could have made 3,769 pips. And if you're trading $1 a pip with your broker, then you would have made $3,769 in 4 hours, which is, I mean, it's pretty nice, about 1,000 an hour. So this is an example of a signal, an indices signal that I would send out to the premium group. The same with how it is right here. There's another entry right here. You know, as price moved to 25%, we would break even. Would be good right there. Same with this one, another entry, and then same with right here. The problem with right here is it looks like it retraced back because, yeah, see how I was explaining earlier. See how the resistance was too close. See, it's only 300 pips. That's super close. And like I said, we try to avoid these trades because odds are if price is too close, it'll reject right off. That's exactly what happened there. And that's why I have those requirements set in place to, you know, pretty much give you guys almost, you know, guaranteed win if all of them line up. Mayan said, how many pips would be too close to support or resistance? Indices are a little different from Forex. So normally for Forex, require 10 to 15 pips from K2SR. Indices require, I'd say about, depending on what your spread is, it might be 300 to 500. Or no, actually, yeah, because spread is usually like 300 anyway, so it's gonna have to be more than 500. Curtis, what do you mean? How do you change your long? Oh, okay. Yeah, so if you want to change it to a long, so if you click on this tool right here, it's the prediction and measurement tools. You click on this right here, you could pick long or short. So you pick the one depending on the type of entry you're taking. But yeah, pretty much, yeah, that's an example of how I would send out a signal. It'd be on the 30-minute. Yeah, let me go down the list because I think some people had some questions earlier. Is Paco still here? Paco's gone. Paco wanted me to look at SPX. Chris, are you still here? I see Chris is here. I don't see Chris Spencer. I'm not sure if that's the same Chris. Chris wanted me to, oh, actually, he said to teach us how to trade US 30, which I did already. Let me see if there's anyone else. Yeah, if you guys have any other questions, feel free to let me know so I can go over. I can do an analysis for you. Let's see. Mayan said, will K2 come out with an EA one day? I have the EA already developed. I'm probably not going to share that with the public though. The EA is probably going to just be used for account management or my account, just my account. But yeah, I do have the EA ready. It just has a lot of bugs right now, so I'm not going to be running it until I have that fully fixed. Especially if I'm trading real money with it. But it might come out eventually. But if I do use it, Curtis is asking what's an EA. EA it's basically an automatic trader. So it'll take trades for me. I have an indicator for that already. So yeah, so pretty much if I run that indicator, see, it pretty much takes all the trades for me. So if I go back and zoom out, I can see all the trades here. So everything's pretty much taken. It's like winner, 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 winner. Pretty much just does everything for me. So you pretty much trade automatically. But there's still a lot of work to do with this indicator, so I'm not going to run it yet. The main problem with this indicator is you can't input news, so it's not going to be able to disregard news. And you can see here, price will swing around sometimes, and the problem with that is we can't have the EA running pretty much all day since there's news pretty often, especially right now with what's going on in the world. But maybe eventually I'll probably have it ready. I just don't have it ready right now. Let's see, CT said, how do you figure the range for support and resistance? Mayan said, the most you've made one day from trading. One day. Probably like 10,000. But that was like that day was just, we were literally hitting like profit target, like back to back to back, like super quickly. I don't know if you're in the premium group, but I think it was like the second week or third week of March. On Sunday, like once market opened, we started entering trades, and yeah, exactly. Curtis was there. Like we were literally hitting like 100 pips profit like every couple minutes, and that day I made a lot. And I don't know. I'm not sure if I shared my my profits with you guys, but yeah, that was like a really good day, and that was pretty recent. It was like a couple weeks ago. How do I celebrate? Celebrate like I do every day. I don't really celebrate. I just, when you're trading, you kind of have to keep a leveled head. You can't get too happy, can't get too sad, because if you get too happy one day, like you never know what's gonna happen the next day. So I'll pretty much celebrate once once I hit 1 million trading. I don't know if that'll be this year, next year, hopefully soon. I don't know, with US 30, I'm getting a lot better at this, so I can probably hit that pretty soon. I'm able to, flip a couple thousand a day. Let's see. Let's go back to CT's question. Sorry, dude, I keep keep missing your question. So let's see. CT said, "How do you figure the range for support resistance?" Sorry, for reverse the trade. Hey, CT, for your question, is that how you figure range for support resistance for reverse the trade? Hey, CT, can you rephrase your question? I'm kind of confused, depending on what you're asking specifically. Man's asking.
Hey, can you hear me?
Yeah, hey CT, what's up, dude?
Hey, what's up, man? No, it's just for the reversal one that you're doing where it's you have to take like a K2 indicator where it's red but in a green momentum.
Oh, the pullback. Okay, yeah.
Or the pullback, yeah. And I just wondered, like, inside or outside of the support and resistance, and what is your criteria?
Oh, yeah. So pretty much the way I measure it, I'll measure it from the entry. So if we're going to enter this right here, so the trend meter is green and then the signal is red. So this would be a pullback retracement candle. I'd set up the long position at the high of that candle. And I would make sure that the entry is at least over 500 pips.
Okay, gotcha.
Yeah, so I'm not sure how you calculate, like, because indices is still new to me, so I'm not sure how is this calculated. I just go off the full number. I know with Forex we go off by this number, but I just go off the full number for indices since they move a little differently.
Well, it really comes down to kind of like what would be the minimum that you'd want to make off of it.
Exactly, yeah, and since it moves a lot faster and the profit and losses are a lot higher, I just go off by the big number because this number just doesn't make sense to me. If we're like, you're up like 10 pips and you're up like $100 already.
Oh yeah, for real.
Yeah, but yeah,
I think one of the examples that you had given before, I think it was outside or it was above the resistance.
Oh yeah. So I just like usually I want to make sure that like the main concern is that if it's past 500 pips, because if it's under 500 pips and your spread is like 277, like how it is on Hugo's, it makes it like almost virtually impossible for you to move your stop loss to break even or like slightly in profit because you still have to cover that spread.
Gotcha.
Yeah. So if you have a 500 pip cushion, like price could be up here and then your stop loss could be right here and then you still wouldn't trigger it even though you have the spread.
Mm-hmm.
And that's the main reason because I want to at least make it to break even because the thing is if price breaks the resistance like it did right here, it like automatically adjusts. And at that point, I want to have my stop loss at least to, break even or slightly in profit. So if it was to pull back, then, fine. Like I've made at least some profit or break even. But if I was to let it run to like full profit, I mean, it would hit. I'm not sure if this actually shot up. But yeah, if you're using the exit strategy here that I was talking about earlier, actually, no, I didn't even make it to 50%. So you probably would have gotten out at break even. Unless you were trailing it, then you could have made like, 3,000, not even 3,000 pips, but maybe around 2,000 pips, which, it's still a good win.
Yeah, big time.
Yeah, exactly. Do you trade indices too, or do you just normally trade Forex?
Mostly indices and gold and oil, just because I trade futures.
Nice. Yeah, dude, I was thinking about getting into options, but I was talking to a lot of my friends that do trade options, and they're saying that the market's like pretty shitty right now to trade options.
It just depends on what you're looking at, and you can find some diamonds out there just because you have some companies that are doing well through this the whole pandemic, right? So I actually last week I got into an option on Walmart, and
for a long,
and it was basically let's see, at $66 per contract, and today it closed at like $445 a contract.
Thanks. Did you still have it open?
Yeah.
Nice, dude. It's like,
Yeah, no, I think I have 2 more days or 3 more days. Thursday expiration.
you hold it to expiration, or do you just?
It just depends on what's going on, and it depends on. There's a lot of different variables, right? But I'll basically I've taken enough off, so I've covered my entry. So everything that's floating right now is profit.
Oh, then you're good. Yeah, you might as well just let it run.
Exactly.
Yeah, dude, that's risky, man. I used to trade options, but then I would always let it run to expiration. I always fuck myself over.
You got to be focused on it. That's the whole thing. You just if you're sitting down there looking at it and focused on it, it's like anything else. You know, you're going to do okay. But when I'm trying to do, you know, indices and Forex and everything else, it's kind of my long term or medium term where I put money. So this is, you know, the Forex and these indices and CFDs and things like that. I'll do the short-term day trade, and then I put some money in the options, and I can go out for a couple months if I need to, and then a little bit of money in investment. But investing is no fun.
Oh yeah, dude. No, definitely. Yeah, like I'm surprised that I just started trading indices. Like I'm pretty big on like scalping, and I didn't realize that indices move like this fast. It's crazy how much I made today. Like I was like, man, I should just drop Forex completely.
Well, there's so much emotion in it in indices because it's psychology, right? And then there's 80% of the stock is controlled by algorithms. So it gets wacky technically, and then all of a sudden people watch CNBC and think the people on there know what they're talking about, and then everybody sells, and it's pretty dynamic. So, but your system is like perfect for it.
Yeah, exactly. Like I try to get in and out within like, you know, a few minutes, maybe an hour at max, because like honestly, you can't even really tell what's happening. Like it's crazy when you look at the 5-minute chart and then you're like, okay, it's been like trending up for a while now. It's going to keep trending up.
And you just have no idea. It's especially in times like this.
Exactly. No,
you know, you go through a regular time like this time last year, and you go through earnings season, you just, you know, you see the big players who have earnings coming in, you know, that they're going to be leading the Dow. So the Dow is going to go up that day. So there's some other indicators when it's not a pandemic that can give you that edge to help you know that it's going to be trending up or down or whatever. But today, this day and age, it's too difficult.
Yeah, dude, it's crazy. Like just looking at like, you know, the chart, the past 2 weeks, it's like, how do you even read this stuff? Like it's crazy because if you draw like trend lines, it breaks like almost every couple minutes, and there's like no way that you can draw like, you know, reliable trend lines and stuff. It's crazy. Yeah, but yeah, I mean, like back to what I think Sius was saying earlier. Like he was asking if it's better during, you know, these conditions or the other, and I'm like, it's really, it's on a person by person basis. Like some people will know how to trade during these crazy periods, and some people won't get it.
I think the fact that you're scalping and you're zoomed in so tight on it that it kind of doesn't matter. And when you have something that's so methodical like your system, it takes all the guesswork out of it. So you don't have to know.
Exactly. Yeah. And that's why I kind of like when the market's ranging, because then you can trade both ways. I mean, it is a lot easier when you're trading in one direction, but I feel like when it's ranging, you kind of have a lot more opportunities because you can just go, I mean, honestly, you could even ride this. Like you can just sell once you get a sell signal and then close it out once you get a buy signal, and then just go both ways.
Well, honestly, if you look at the way it's structured, I'm pretty sure the algorithms are already doing that.
Oh yeah, exactly. It looks like it lines up with it, right?
Yeah, exactly. So what they're doing is they're running hedges on everything.
Exactly. And
what they'll do is they'll push price up and they'll add orders in, and they'll get it up to a point to where they want to turn it, where there's some more liquidity, and they can churn it sideways, get retail involved, and then they can use those buy stops for liquidity to move it back down again. And they just stay in the market on both sides.
Exactly. No, I agree. But yeah, man, it's crazy. Like I see people that are still trying to, you know, trade indices like intraday or even swing trading it, and I'm like, dude, that's crazy. Like this is like, I don't know how could you even predict that there's gonna be a bullish move here, or, you know, bullish move here, or even today. Like I didn't even see this coming, honestly. I thought this was a crazy move up. I don't know if you saw this coming.
Well, no.
Yeah, it's crazy.
No idea. I mean, it's usually after the weekend, you know, the bad news hits and things go down, but then you get a couple stocks that do well and they lead the indices, and everybody jumps on the psychology train. And
Yeah,
By the time everyone's in there, it starts to correct a little bit. So who knows these days? It's too hard to guess.
exactly, and that's the reason why I focus so much time into like learning how to scalp this asset, because dude, there's so much money to be made trading indices.
Yeah.
Yeah, it's crazy. Let's see.
Oh, well, appreciate it, man.
Yeah, no problem, dude. Let me go back to the questions. So, Mayan, which pair do you recommend for newbies? So, for newbies, I recommend just major pairs. If you're trading Forex, so the major pairs would be basically all pairs matched with the USD. So, AUD USD, Euro USD, GBP USD, NZD USD, UCAD, UCHF, and UJ. They're a little bit easier to follow since they're matched with the US dollar. They usually move a little smoother. So if you're brand new, then I'd probably stick with these, and then after that you can move to other crosses. So you can move to you can move to like the other pairs like AUD-CAD, AUD-CHF, AUD-JPY. But just to start off, I recommend that you probably start off with just major pairs. Let's see. Curtis said, "Why is your K2 SR different?" Okay, Curtis, I'm gonna unmute you.
Yeah, I was just talking in the sense of like measuring the pips. Like sometimes it seems like the K2SR, like support and resistance will be kind of close. So it'll look like, okay, it may be within like, so let's say if I was to, let me see if I can get a chart.
Yeah, like
Okay, so say I was to measure from the last, this is just saying, from the last candle, which was a bullish candle.
So,
that one right there.
Oh, this one right here?
Yep. So if I measure from the top of that.
Oh, from the top to the resistance.
Mm-hmm.
Yeah, so it'd be about 757 pips. So if it's above 500, then you're fine. The main reason for that is just so you can move and profit far enough where you can move your stop loss to break even.
Because of the spread.
Exactly, the spread. And the spread.
Okay. And you know what it was? I think that was what was messing me up because I wasn't paying attention to the spread.
Yeah, exactly.
And the spread, the spread will sometimes be so high that you don't even really get a profit before it turns around.
Oh, exactly. Yeah, no, for sure. That's why you have to, like when you're not even just indices, but any other Forex pair, you just want to make sure that you have at least the spread plus, I always add like 2 or 3 pips. So
right.
Generally, like, normal spreads like 2 to 3 pips. I would make sure that price was at least like 5 to 10 pips in profit until I move it, above break-even.
Okay. Yeah, because I don't know if you seen gold last weekend, but they was tripping. The spread was like 500.
Oh yeah, people were talking about that. I think
it was at one point it was over 1,000. I'm like, I ain't touching that.
Yeah, I mean even right now, like it's weird because my spread shouldn't be that. Yeah, because for my account, I'm logged in. So my spread's supposed to be really tight, but right now it's 500. I'm pretty sure normally it's like under 100, right?
Like around 2 or a little less sometimes.
Yeah.
But like mine's is 227 right now.
That's so weird. Yeah, it's weird because I'm on a special account. I'm on a DMA account, so it's supposed to be really tight, like under 100. But for some reason, it's crazy. It's like 400 right now. Like I wouldn't even touch it. If
like gold is 230. I don't know why.
Yeah.
Oil is 3. AUS is 210.
Yeah, that's crazy. I don't know why my spread's so high. It normally isn't.
US Mexican is 2,037.
Oh yeah, I took that off my watch list. I don't even look at exotics anymore.
See it. Bitcoin is 1,600. Like,
Yeah, that's crazy, dude. Yeah, if it's that high, then I'm definitely not gonna.
Yeah, I know the broker got to get paid too, but geez.
Exactly, and if you're like offshore those or even the ones that are worth ones that are, like they're going to do that on purpose. Like once you get close to your TP, they're going to add a little bit of spread to that, and then make sure you don't hit your TP and then it reverses right away. Let's see, CT said liquidity. Yeah, there's no liquidity right now. I mean, first of all, because it's we're in Asia session, but I mean that's still pretty bad though. Like I'd expect at least some liquidity. I've never seen it this high before. Like at first I thought it was because I wasn't logged into my account, but I'm logged in, so the spread should be a lot tighter. Oh yeah, no, I agree with CT. Yeah, the risk is a lot higher for the broker because obviously they need to get paid first. Let's see, Mayans, did you ever trade the pullback in a bull run? Yeah, hey Mayans, so the pullback actually works. It works a lot better during a bull run. I'm gonna try to see an example here. Because do you remember any pairs that were like trending up heavily last week? I think EU might have been.
Up? I don't know. I thought UJ was. I can't really remember.
Yeah, I just want to show them an example of. Well, yeah, even the opposite way. So if it's we're probably not going to find anything that was trending recently.
Yeah, last week was so weird. I don't know if anything was trending up.
Yeah, I think we could go back to like older data. So like, yeah, so like right here, this is it's like a slight bull run for your USD, and the pullback strategy works perfectly during these periods actually. So like right here, this would be a valid pullback entry because the signal is red and the trend meter is green. You would have entered at the high of this candle, and then there you go for a straight winner. Right there, you do the same thing again right here. There's a pullback signal right here. It's red. The trend meter is green. Another winner right there. And then you just literally, it actually works a lot better when market's trending. Like that's when you should be using the pullback strategy because you know which direction price is moving already. And as price pulls back, you can just set your buy stop, and it's like an automatic win every single time. Right there.
So I know somebody said something about trading on the computer. Apparently, like I have an HP. I haven't really seen how it works, but Hugo's Way does have an app that you can download out of the Microsoft store. The charts look kind of similar to TradingView, and it looks like you can set the stop loss and everything like you can on TradingView, but it looks weird.
Yeah, no, I've heard about that too. Aaron's been telling me about that, but I haven't looked at it myself. I mean, I personally don't like MT4 at all, so that's why I don't even download it on my Mac because I know Hugo's Way has their model for it. I did run it on my computer one time, and it just kept freezing up on me. So I was like, yeah, I'm never going to use this because if I'm risking a lot of money, I'm not gonna, if my computer freezes on me, then I'm gonna be pissed. So I was like, I'm sorry.
Right.
TCT said, how do you adjust stop so fast on MT4 when scalping?
Stare at your phone.
Yes. So yeah, that was like literally earlier when I was trading this, when I was scalping over here, I was just staring at my phone the whole time. So the entry was right here. Where was it? Oh, it was right here. So yeah, when price moved, actually we were in a buy, I think. Yeah. So when price moved up, yeah. So I was literally just watching my phone, and as price moved up, I just moved my stop loss to break even, which was that number, and then I just had because I don't on the compute on TradingView obviously because I'm trading on Hugo's. I would just calculate like where my stop loss was at that time, which was like 22590 or something like that. And then I would just watch it, and then I would just measure it on here to a specific number, And then once it reached once it passed that number, I would just input it on my phone. But I mean, the problem when you're doing it mobile is like you have to go super fast, or you're pretty much gonna get screwed, because MT4, like, I feel like it's a little slow even though it's an older app. And there's like sometimes where I get an error and I'm like, fuck. Like if I got an error here, I would have been pissed because it would have went straight to stop loss. Oh yeah, no, I agree. I wish there was a drag and drop feature too, where you could just, you know, click and copy and paste it. And that's what I like about TradingView so much, is like you can easily just, you know, enter trades directly on the chart. When I'm trading other things, I usually trade on Thinkorswim, which is it's kind of, but it's also kind of similar to MT4, where you kind of have to put the numbers in, which is kind of annoying. I kind of like where you can just click and then, you know, enter a trade. Right. Is there any other questions, guys? It's about 9 o'clock. So we've been on for about 2 hours. I'm willing to stay on longer. I just want to make sure there's any questions, because I still need to convert this, and usually if it goes after 2 hours, it takes a long time to convert for YouTube. Chris said, if time allows, would you show us how the K2 strategy works? By the way. Hey, Joe, yeah, I think the call is recorded. Let me see. Yeah, it's recording. So I'm going to upload this to YouTube a little later. I'm going to go over the strategy for Chris right now. Chris said, oh yeah, you're able to install MT4. I installed MT4 on my Mac too, but for some reason it freezes up on me every time I try to use it. And if I'm trading, you know, big lot sizes, I really don't want to risk it, so I just use my phone. I mean, it's a little bit of a hassle, but it's a little bit more reliable as well. So I just go with the phone for now. But yeah, let's go over an entry for you. So let's just go to like a normal Forex pair. Let me just check if there's any valid entries right now for people to take, so I can share it with the premium. So we had this entry that I shared earlier. We didn't take it because of the Australian news. And it looks like it affected it. So good thing we didn't take that trade. I'd still be in profit, but risky trade overall. Yeah, it doesn't look like there's any valid trades right now. Okay, so let me go to a normal pair. To show you an example, I'm probably gonna have to go back in time because market wasn't really trending heavily. So it was kind of hard for me to identify any trades. Let me see if this is a valid one right here. We have 2 valid trades right here. Just want to make sure the resistance and the support isn't too close. All right, cool. So this is a perfect example right here. So let me go over this is going to be the original K2 strategy. There's a couple of variations to it. There's the pullback strategy, which is what I explained earlier. It's pretty much the same strategy, but different entry. And then there's the scalping strategy, which is pretty much the pullback strategy, but on a shorter time frame. So K2 trading strategy requirements. So for 1, K2 signal present. 2, K2 trend meter matches signal. And lastly, price not within 10-15 pips from K2 SR. Right, cool. So these are the 3 requirements that you're looking for. So first of all, you want to make sure that there's a K2 signal present. As you can see here, we have a sell signal. Next, you want to make sure that the K2 trend meter matches the signal. So down here, the trend meter is red. These are both red, so this gives you a valid entry. Lastly, you want to make sure that price is not within 10 to 15 pips from the K2 SR, which is this red line and this green line right here. If this happens where the K2 SR isn't within price, all you need to do is move on to the higher time frames to confirm. So we're on the 30-minute. We'll go on the 1 hour. It hasn't adjusted there, so we'll go to the 2 hour. And you can see right here that support is like way down here. So if you measure this from entry, support's going to give you enough cushion to move about over 200 pips. Oh yeah, CT, yeah. So pretty much just move up a time frame. And then if you go to like the next higher one, so I was on the 30-minute, so I just go, I usually double up. So I'll go from the 30-minute to the 1 hour, 2 hour, and if this isn't here, I'll go up to the 4 hour. So there's a 4 hour. It looks like it's at the similar location as a 2 hour. And if it doesn't show on there, it usually does. If not, I'll just double up to 8 hour. It's still pretty far, and then the daily. But yeah, pretty much all the requirements were met. So in this situation, this makes for a valid entry right here. In order to set up your stop loss and profit target, you just zoom out. And then you'll use the short positioning tool. And then what you're going to do is you're going to enter on the open of the following candle right here. And then there you go. Set up for a 1-to-1 risk-to-reward ratio. But the thing is, a lot of people question the 1-to-1 risk to reward, but a lot of people don't understand that we minimize risk when it's possible. So as soon as price reaches 25% in profit, which would probably be around there, this is going to be 50%, and this will be 75%. It doesn't need to be exact. I usually just eyeball it because it takes way too much time to calculate it. But once price reaches 25%, like it did right there, we move our stop loss to break even. So now, regardless as to whether price moves down to profit target or if price swings back, then you're guaranteed profit. Like you pretty much eliminated risk 100% moving forward from here. CT said, just run your fib tool. Yeah, you can run the fib tool too. It's personally, I don't use fib, so I might be applying it wrong. I know NS uses it a lot. But I guess pretty much you would just set it from there to, oh yeah, you're right. Pretty much. Yeah, so if you wanted to get, close to exact numbers, it looks like it's pretty much on point. Wow, that's really smart. Thanks, CT. I never thought about that. Yeah, pretty much. And then yeah, if you remove the fibs, then yeah, there you go. You have the 25%, 50%, and 75%. So yeah, once price reached 25%, you would move your stop loss to break even. It's not completely necessary. You can even move it once it moves to 50%. But if you want to be extra careful, then yeah, you can move it to 25%. So here you go. You would have gone stopped out in profit. I mean, either in profit or at break even. And then if you wanted to re-enter, you could re-enter again with a sell stop right here. And then pretty much let it run a profit. I know a lot of people in the premium, they just let it run to profit because it usually does hit full profit. But depending on what pair. So if you're trading a major pair like Euro USD, it's actually, it moves a lot smoother. So for a pair like this, I'd let it run to full profit. But if you're trading something that's a little erratic, like GBP AUD or Euro odd or something like that, something that kind of moves a little crazy, then I would for sure move your stop loss and profit. But if you're trading a major pair like Euro USD or GU, then I would either let it run to full profit or I'd move it to break even once it reaches 50%. So if you did that here and you let price run to 50%, so I'm just going to take this off. Yeah, see, once price moves to 50%, then you'd eliminate your risk and then just let it run from there. And then you would have hit full profit right there. So in about in about 12 to 13 hours, you would have made 65.3 pips. So if you're trading that with a standard lot, so plus 60, what was it again? Yeah, 65.3 gain. And if you're trading standard lot, it's $10 a pip. So plus 65.3 pips times $10 equals $653 USD in profit. And it's pretty simple. So this was a valid entry right there. There was another valid entry right here as well. So if you saw that, you could have entered 2 positions. So you still have this one running. You could have also entered this one. And then obviously that hit profit target too. So you'd have made 65.3 plus 43.7. If you add that up together, it's probably about $1,000 in $1,000 in profit for 2 trades. Yeah, so within about 9 hours, you would have made about $1,000, which is that was pretty nice. Yeah, this is how you would apply the original strategy. The other strategy, the pullback strategy, is the same thing. So this is the original strategy. I'll just put these side by side with the pullback strategy. Let's color a different color. Green. So if you're running the pullback strategy, it's the same exact strategy. The only difference is your entry. So instead of entering when they match, the only difference is that the KT trend meter does not match. So for this right here, we have a green signal, but the trend meter is red. So in this situation, this fulfills these 2 requirements. So it's pretty much the same strategy. You just enter a sell at the low of that candle for the pullback. And then you let it run the same as you would if it was a normal entry. And there you go, it would have hit. I mean, that's the versatility of the strategy. Technically, you could have entered 3 positions. You could have entered this one, you could have entered the pullback, and then you could have entered the other regular one right here. And if you add those all together, you would have had like 1,600 pips. So you would have made 1,600, 1,700 with those 3 trades within 9 hours. Tyler said, what time frame is the original strategy best on? I think the 30 minutes the best. I enter all my trades on the 30-minute. I think that's the most reliable, where you'll get a decent amount of entries. I used to use the 1 hour, but if you're watching the 1 hour chart, you're not going to find very many entries, especially if you're trading intraday, because obviously there's only so many hours per session, and if you're going to enter a trade, when the market's not running or during Asia, volatility is going to be super slow, and you're not going to be able to either catch full moves or catch any moves for that whole day if there's no signal present. So as you can see here, for the 30-minute, there's three different entries right here. If you go to the 1 hour, there's only 1 entry here. So instead of having only 1 entry, you could have had 3. And then that's why I find the 30-minute to be a lot more efficient than any other time frames. If you go on anything under the 30-minute, you get a lot of noise. You can see here on the 15, there's a ton of signals here. There's like a ton of noise, but it still does work. So you see here, they both match for a sell entry. So if I was to delete these, you could still apply the same strategy on the 15-minute. It's a pullback entry. It's another sell entry right here. Another pullback entry. And the list goes on. Like if you were to trade this on the 15-minute and you knew it was trending heavily, you could have made a lot of profit off every single entry here. Like there's a ton of entries for you to choose from. But the risk that you take when you trade on these shorter time frames is that there's a lot of noise on these charts. So I mean, there's no guarantee that price is going to keep moving in that direction. So I find the 30-minute to be sweet spot for the K2 strategy. But yeah, if you took the 15-minute chart entries, you could have had 1, 2, 3, 4, 5, 6, 7, 8. So pretty much 8 wins for 40 pips each, and you would have made 320 pips. And you multiply that by 10, you're gonna make 3,200 within a day. So you make about 3,000, 4,000 in a day. But yeah, for the most part, 30-minute would be the best chart for you to apply the K2 strategy. Let's see, is there any other questions? Let me see if there's anything. I haven't seen anything, so if you guys have any questions, feel free to. CT just pulled out of 68 off that G. Oh yeah, let me check it. Yeah, so CT sent me this GA trade earlier. It was a risky trade, in my opinion. Oh yeah, because you were in a long. That's why I thought it was risky. Let me see if I have. Yeah, so CT sent me this trade earlier. He was in this position for a long, but I saw that it was in a clear downtrend, so I was like, man, it's a little risky. But look, thankfully it played out in his favor. So it looks like he entered somewhere around here, I think. Yeah, this low, I think, or somewhere around here, around the 2, yeah. Oh yeah, from 2. So yeah, got a lot from there. 2. Wow. How many pips? 68 pips? Wow, sniper right there. Yeah, so if you guys were trading this with a standard lot, you would have made 686 pips. I mean, $686. Actually, it might be a little more because this is a GBP pair and it's worth a little more. So yeah, I'm sure CC made some nice money off that. Yeah, I'm surprised you were still in it. I thought you were gonna get off it. Yeah, man, glad for you though. That was a risky trade. But yeah, it looks like it might be coming down, so you might even be able to write it back down if you wanted to. Yeah, it looks like it might test the trend line, come down. So if I was gonna enter this personally, what I would do is I would it looks like it's in a downtrend, so I probably would have trailed this since there's a nice big wick here. I trail it with put a sell stop right here. So if it does pull downwards, it'll automatically fill your order. Like if it was to reject off the trend line, and it'll automatically fill it, and then scoop up a nice 100 pips right there. Yeah, man, that was a good call though. Honestly, I was kind of scared for you when you sent me that, but I'm glad it worked out. All right, let's see. Is there any other questions, guys? If you guys don't have any other questions, I'm probably gonna get off so I can convert this for YouTube, and so everyone else can watch it. Otherwise, if you guys have any other questions, yeah, feel free to message me on Telegram. I can answer whatever questions you have. But yeah, I think that was about it. Hope this helped. Yeah, CT Asian session melt up. I need to check on US 30 actually. I'm tempted to keep scalping it, but I'm not sure where it's moving. So like this might be, this could have been a good entry right here. The only problem is that there's some bearish candles here. So it's not a straight, I mean, it is a straight bullish move, but this kind of worries me right here because it pulled back a little bit. So I'm not sure if it's going to shoot back down. But honestly, I might just take it. So what I would do is I would enter right here at the close of this candle if this closes with the signal intact. It's got about 3 minutes, so it might not close just now. But if it does, yeah, I might enter this. All right, guys. I think that's it for the questions. Yeah, no problem, CT. That was definitely a good call. If you have anything else, send it over to me and I'll take a look. Maybe I'll try to pop in on some of your trades too. But yeah, guys, if you guys have any questions, feel free to message me on Telegram or email me at sean@kttrades.com. On Telegram, I'm just K2_trades. But yeah, guys, it was a good trading room today. I'll try to be on again tomorrow. So me and Aaron are going to try to hold these twice a day now, probably 9 a.m. to 11 a.m. and then 7 p.m. to 9 p.m. Pacific Standard Time or Pacific Daylight Savings Time. So yeah, guys, hope this helped. Otherwise, I'll see you guys later. Tyler, yeah, I'll try to call scalps tomorrow morning. So if I end up going online, I'll be on about 9 a.m. tomorrow. I'll try to. I need to watch the market to make sure there's no news going on. If there's news, then obviously I'm going to sit out. But if there's no news and the market's pretty clear, then I'll be on around 9 a.m. tomorrow. Yeah, Pacific Daylight Savings Time. So I'm not sure if you're located in California, but we're on Daylight Savings Time. So depending on where you're at, we might be an hour ahead. Yeah, guys. All right, I'll see you guys later.